Markets are just, they're at the top of their trend channels right now. Typically, when we see markets up this deviated from the 50-day moving average, you do get some type of corrective or consolidative action. Again, it's been a great trade since the election. You know, we added exposure to our portfolios. It's been doing fine. But again, just kind of things have gotten a little bit too hot, too fast here over the last few days. Here's what you need to know before the bell this morning. Market has been on fire over the last few days since the election. We came down, and of course, we touched the 50-day moving average, kind of held that support going into the actual election itself. And then, of course, post the election results, the markets have just taken off here over the last few days. We're getting pretty extended here. One of the things we'll talk about this morning is that investors are now more exuberant than we've seen them ever on record. Over the last few days in particular, we've seen just everything running. Meme stocks, most shorted stocks. We have some of the highest call options going on to Kathie Woods Ark Fund right now, which we haven't seen that in forever because it's been such a big underperformer. But everybody's betting on everything going up right now. Markets here, clear buy signals. From a bullish perspective, everything is just fine. There's nothing really to worry about. But we are very rapidly getting back into pretty overbought conditions for the market. So again, just don't forget that yes, it's all exuberant right now. Markets will likely be higher into year end. But again, this just you're going to get a pullback here of some sort. And again, not dramatically, but you can pull back to the 20-day moving average, which would take you back to about 5820 on the S&P 500, and we're currently at 6,000. So you could have a decent 1.5% pullback here fairly easily, and that will get you set up for that year-end rally. But again, just because the markets are so kind of extremely overbought here, I would do a little bit of just kind of risk management if you need it. If you've got some trades that have just been going crazy lately, you've got big profits in them, all we're talking about is just take a little profit back in, all right? I mean, just don't be greedy, right? But markets are going to move higher into year end. But again, you can kind of just manage that risk accordingly as we head that way. But again, markets are just, they're at the top of their trend channels right now. Typically, when we see markets up this deviated from the 50-day moving average, you do get some type of corrective or consolidative action. Again, it's been a great trade since the election. We added exposure to our portfolios. It's been doing fine. But again, just kind of things have gotten a little bit too hot, too fast here over the last few days, and that's at least something worth watching into. The other thing that's been rising very sharply here has been the dollar. U.S. dollar index has also been on fire really since the election. Going into the election, it started getting a bid, but since the election has just really kind of exploded here as optimism is building really kind of globally for investors about the outlook for the markets, the U.S. economy here, particularly economic policies, deregulation, tax cuts. That's all very beneficial for the dollar. That's been leading to a very sharp rise in the dollar here over the last few days. And again, we've talked about before, markets were hedging with gold for the dollar. And again, this is always the way it works, is that gold was hedging for a dollar risk, and they were also hedging for election risk. So post the election, that reversal trade is now underway. So you've now got gold getting sold off, money moving into the U.S. dollar, so they're swapping reserves and moving some of those reserves into more risk-based assets. So again, that's not really a surprising outcome from the election. And again, it's just markets and managers were overhedged going into the election. So the catch-up trade now is occurring post the election. But again, things are getting pretty far ahead of themselves on all fronts. So we're going to see probably a little bit of rebalancing here, a little bit of just volatility here over the next week or so as we head into the Thanksgiving holidays. Okay, that's what you need to know before the bell this morning.